Employer's liability insurance definition coverage limits. What is employer's liability insurance? Employer's liability insurance is an insurance policy that handles claims from workers who have suffered a job related injury or illness not covered by workers' compensation. A type of liability insurance, it can be packaged with workers' compensation to further protect companies against the costs associated with workplace injuries, illness, and deaths. However, employers' liability insurance does not cover legal costs from employee lawsuits charging discrimination, sexual harassment, or wrongful termination. To cover this situation, an employer would need to purchase a separate type of policy called Employment Practice Liability Insurance (EPLI). Key takeaways: employers' liability insurance covers companies against costs and claims by employees that are not covered by workers' compensation. Many organizations choose to carry employers' liability insurance to cover help legal costs and lawsuits. Most worker compensation insurance policies automatically include employees' liability insurance. Employers' liability insurance places limits on the amounts paid out per employee per incident or per policy. How employers' liability insurance works: the majority of private sector employees are covered by workers' compensation law established at the state level. Federal employees work under federal worker compensation laws. State require most employers to carry worker compensation insurance. Workers' compensation provides some level of coverage for medical expenses and lost wages for employees or their beneficiaries when an employee is injured, falls sick, or is killed as a result of their job. There is no need for the employer to sue the employer to establish fault in order to qualify for workers' compensation benefits. However, if an employee feels that workers' compensation does not adequately cover their loss, perhaps because they feel their employer's negligence caused their injury, they may decide to sue their employer for punitive damages arising from their situation for things such as pain and suffering. This is where employers' liability insurance comes in, designed to deal with expenses that fall outside the realm of the workers' compensation status or general liability insurance. It provides additional protection against financial loss for the company or business. Employers' liability coverage is typically purchased along with workers' compensation. In fact, employers' liability insurance is often called Part 2 of a worker compensation policy. Part 1 of the policy is the actual works which pay for medical death expenses and partial lost wages from work-related injuries and illness. Part 2 would be the employer's liability coverage, protecting the business from claims for additional damages and compensation. Every additional sum a firm without employer liability insurance protection would have to pay in court cases, according to the High Court's guide to employer lawsuits. What employers' liability insurance coverage? Other sorts of claims covered by employers' liability insurance include third-party lawsuits filed by another intentionally distant involved in the workplace incident. An employee may be injured by a piece of equipment on the job, for example, and sued to equipment manufacturer, who then files suit against the employer. Loss of consortium lawsuits filed by family members of a deceased disabled employee seeking compensation for the loss of the relative of their income. Consequential bodily injury lawsuits filed by a non-employee who suffered physical damage as a result of an employee injury, such as suppose who develops health problems from taking care of the injured workers. Dual capacity lawsuits: when an employee sues their employer both as employer and as something else, the maker of a product, provider of service, landlord, etc. One example: a piece of ceiling in the workplace falls and hits a worker, and they file suits against their company and its dual capacity as employer and as the premium owner. Many companies choose to carry employer liability insurance to help cover the costs of defending the organization in court. Claims can become complicated and costly for employers, particularly in the case of lawsuit. A claim may be legitimated or not, but even so, many businesses cannot accept that level of risk, and they take measures to insure against it. Their liability coverage applies to both court-awarded sums and the payments reached out of the court settlements. For more videos, please like and subscribe my channel. Thank you, friends.